There's a lot of questions and probably some confusion out in the market about BaaS and what is BaaS and what does it mean and how do you use it. So I'll start at the very beginning. BaaS stands for Banking as a Service. And what it is that a regulated entity, typically a bank or a credit union, is providing banking services to some sort of non-regulated entity in almost, you could think of it as a wholesale retail fashion. So the bank is providing a service such as setting up an account or taking a payment or providing a loan, small or large. And they're providing that to the non-regulated entity, which is typically some sort of web application, web-based company. And then that company then provides that to their end customer. So an example that you might think of is if you buy something and you get a little message that says you can pay in 3 easy payments. So we call that buy now, pay later. And a firm that uses that is called a firm. And a company might use a firm to provide that for you. But a firm is then backed by a regulated bank in the background that provides all the security and compliance around the banking activity. I love the wholesale retail model for BaaS. So if you think about a bank has the ability, because they're a regulated and chartered institution, to offer banking services, and you have a fintech that needs to offer those banking services, you can think about that wholesale retail model. So the bank offers them in a wholesale fashion, and the fintech offers them then to the end customer in a retail fashion, just like you would have with a car dealership or a store. It's really two sides of the same coin. So banking as a service, or BaaS, is the bank or credit union or other regulated entity providing that service. And then embedded banking on the other side is the non-regulated entity allowing those banking services to happen for their end customers. So it's really two sides of the same coin. You could think about marketing BaaS as well in a functionality play type manner. And so that would be specific functionality that a fintech wants to offer to its end customers. One of those might be to accept payments or to make payments or to buy now, pay later, or have a certain type of loan. So that would be a functionality play as opposed to an affinity play, which is more about what people are interested in or what they're qualified for. You can think about BaaS in a bunch of different ways, but one of the ways I like to think about it is, how could you sort of bucket ways to capture customers? And one way is what I call the affinity play. So that would mean that a platform fintech markets to people with a specific qualification, or they have an affinity towards something specific. So you might think that, a qualification could be that they're doctors, or an affinity could be that they particularly care about the environment. And so you can then translate that into, are there certain types of financial products that you want to market towards physicians? Maybe they need capital to start up a practice. Maybe they need restructuring of loans. There's all kinds of things that might fit that specific group of people. If you think about the people who care about the environment, maybe they are interested in purchasing carbon offsets. There's things like that that are specific financial tools that makes sense for someone based on their qualifications or their interests.